Horst Lüning was invited by Mario Lochner and talks about the bullish case for Bitcoin and why the Bitcoin rally is likely to continue in 2025, discussing the factors that support this, but also mentioning that a potential bear market might be on the horizon. I've cut out the best scenes because there are some really interesting points here, and Horst Lüning often has a very intriguing market perspective that we're going to look at together now. And then I'll give my reaction and assessment on that.
Bitcoin, if you do the math, it's nice to see. Statistically, that the halving tends to take a while, so we might, for example, calculate things like that. But we might hit the peak around the middle or fall of next year. Do you think there's still a lot to come? Yeah, I admit it. I believe there's definitely more to it. Do you think there's still a lot to come? Yes, I am too. I admit it. I am too. I think there is definitely still something in there.
So I'm not selling my Bitcoin either, especially after BlackRock launched that Bitcoin ETF. I have to say, these people are so important globally that they've talked to everyone, both the Biden administration and a potential Trump administration, and they made it clear beforehand that in 2021, Bitcoin faced a significant risk of being banned or not. And only then did they do it. So that was basically the big endorsement for Bitcoin, that they launched it and they've invested so heavily at BlackRock that it's really taken off. I think they have more invested in Bitcoin now than in their gold ETFs. So things really took off there. The big endorsement came, and now the new SEC head supports Bitcoin. Bitcoin's image has improved. Now it's about ETFs. Horst Lüning confirms Bitcoin's rise to the Champions League thanks to BlackRock. The previous guy was a staunch opponent of Bitcoin. And now it doesn't look so bad for Bitcoin. As I said, gold has always been around for a long time, but now it's all about the ETFs. We're not even looking at the gambling aspect anymore. That's just a gamble. Now we're really comparing ETFs and funds against bonds.
So Horst Lüning simply confirms here once again that Bitcoin has now really arrived in the Champions League thanks to BlackRock. And of course, now it can't be banned anymore because all the big players are in on Bitcoin. If Larry Fink has Bitcoin, if Michael Saylor has Bitcoin, and now even Donald Trump has Bitcoin, with the whole Trump administration owning Bitcoin. And that's a fact that JF Kennedy or Howard Ludwig, the new SEC chief, and the new Treasury Secretary in the US all own Bitcoin, so it can't really be banned anymore. Investors need certainty. So when big institutional players invest in an asset class, they want regulatory certainty. They want to know clearly whether it's supported by the state or the government or not. And accordingly, Horst Lüning is very confident that a lot of things have already been checked behind the scenes before the ETFs were even approved. On the other hand, it's also very interesting. I've mentioned this in other videos before, that the Winklevoss brothers have been trying to get a Bitcoin ETF approved since 2012 or 2013. Now BlackRock comes in, and within half a year, 3/4 of a year, they've managed to get the ETFs approved. It's also really exciting that BlackRock is increasingly realizing that they can actually make money with Bitcoin. So now the big question is BlackRock really interested in Bitcoin, or are they just looking to make money off of it? In my opinion, it's mainly about making money. It's not really a bad thing or anything, because if we take a look, BlackRock itself doesn't hold a lot of Bitcoin. They've bought a few Bitcoins now, but in their own funds, or let's say on their own balance sheet, they're not really holding actual Bitcoin. It's just tiny percentage shares where they've kind of bought into their own Bitcoin ETF or something like that. Bitcoin isn't held by BlackRock. They're holding it for clients. This signals they want to earn fees but aren't interested in holding large amounts themselves. Or maybe they're not ready yet. I don't know if that will change. Even if BlackRock isn't into Bitcoin, they must open up to it to avoid missing a huge business opportunity. Other asset managers will join too, like Bitcoin is compelling. Even skeptics like BlackRock must consider it to avoid missing opportunities. Asset managers like Vanguard will eventually embrace Bitcoin, realizing major players profit from it. We will now also see other asset managers, such as Vanguard, who have been closed off to Bitcoin, will eventually come around and say, hey, we're opening up to Bitcoin now, or JP Morgan or someone like that, because they'll realize, okay, all the big players around us are making good money with Bitcoin and we're not in on it, so we have to open up too. And that's exactly what I meant. Even the folks who aren't 100% sold on Bitcoin will still jump on the Bitcoin bandwagon, either because they have to or because they want to, since they realize, hey, I can make money here, I need to be a part of this. If I miss out, then I'm at a competitive disadvantage. And that's the cool game theory of Bitcoin. You have to get on board and you can't just shut yourself off from it. If I miss out, then I have a competitive disadvantage. And that's the cool game theory of Bitcoin. You have to get on board and you can't just shut yourself off from it. Bans don't do anything. Fighting against it doesn't help. The most sensible and rational thing you can do is to get on board with Bitcoin.
If you go out of the commodity, like gold, and then go back in, you have to hold it for a year to get the tax exemption. The same applies to Bitcoin, gold, and then you go back in. You have to hold it for a year to get the tax exemption. The same goes for Bitcoin.
And taxes are definitely an important factor there.
Sure, a lot of people forget that it's a tricky situation. If you actually had to do something with Bitcoin, like if there were a Bitcoin ban or something like that, and you're not in it, or not in it long enough, you might end up selling before the ban hits or something. And then you end up paying a ton in taxes. That's just dumb.
Do you still believe in it? Of course, a Bitcoin ban is possible, but it's become pretty unlikely at this point. But then it should already be happening. Yeah, sure, that would definitely be a shocker, but a global ban would probably be pretty tough, right? Not at all. That probably wouldn't be possible, would it? Yeah, that's hard to imagine.
What's being brought up here is also a very, very important point. It's really turned out that a HODL strategy is way smarter than just constantly trading back and forth like a pocket layer style, just jumping around trading different crypto tokens or whatever, or going from Bitcoin and other assets to cash, then back into Bitcoin, cash again, then back into Bitcoin, timing the cycles. It may be that one or the other manages to do this, but here hosting actually brings another good argument, which actually speaks in favor of the HODL. So the idea is to just hold on to your Bitcoin long term, not doing anything with it, and just leave it sitting in your wallet, preferably a self-custody wallet. I'll also drop a link below to a TREZOR hardware wallet so you can easily keep your Bitcoin in self-custody. You don't have to leave your Bitcoin on an exchange or anything like that, especially if you have a HODL strategy. The more personal responsibility you take on, the better it is. So the more you have a HODL strategy, the better it is, the more personal responsibility you take on. If your Bitcoin is on an exchange, it's at risk. Exchanges can fail or be hacked. A hardware wallet like the TREZOR is recommended. Use code BitcoinHotel for a discount. You can choose other wallets too. Holding Bitcoin for over a year is tax-free in Germany, but rules vary by country. There's talk of a Bitcoin ban, but other scenarios exist. If you get cold feet and now what's really important is that if you decide to HODL Bitcoin, you have the big advantage of being tax-free as long as you've held the Bitcoin for more than a year. At least that's how it works in Germany. Austria has a different situation, and other countries have their own rules. Now, the topic of a potential Bitcoin ban is coming up again. There could be other scenarios too. It doesn't have to be specifically a Bitcoin ban. But if you, for example, start getting cold feet and feel anxious and decide to sell your Bitcoin because you think you need to cash out for a bit, and then here you get paper hands and idachi. You get scared and sell your Bitcoin, then see another opportunity to get back into Bitcoin. An event forces you to sell, and if you see another opportunity in Bitcoin and decide to jump back in, but then some event happens that forces you to sell your Bitcoin, you might find yourself outside of that one-year tax holding period. You could end up having only held your Bitcoin for 2 or 3 months, and now you have the problem of having to pay taxes on your Bitcoin gains. If you had just held on to your Bitcoin the whole time, you wouldn't have had to pay taxes on those gains. And that is, in the end, the big issue, I would say, that you always have to take into account here. This isn't tax advice, but for so many reasons, there's a strong case for just hodling. And if you do decide to sell, you should definitely think about only selling small portions of your portfolio, never everything. It's really interesting because Mario Lochner talked with Horst Lüning about his portfolio in that interview, and Horst mentioned that he has a 25% allocation in Bitcoin. I remember the last time I interviewed him on our channel. He mentioned having a smaller Bitcoin allocation, but he also said that he lets his winners run because he doesn't want to cash out on all those gains. Because a lot of people do things like that. So rebalancing, for example, Bitcoin now has too high of a share, so we're selling off about 5% or something like that. And he didn't do that. And this leads to Horst Lüning saying in the interview that he has a 25% allocation in Bitcoin. And that's always the thing, even if you have a small Bitcoin allocation, like just 2 or 3%, it's the same with asset managers. If they just let it ride, just hold it without doing any rebalancing. Eventually those 2% can turn into 10%, then 20%, then 30%. Of course, there are no guarantees, but this has happened a lot in the past. For example, people who dipped their toes into Bitcoin and then, wow, 5 or 6 years later, Bitcoin became the biggest position in their portfolio. Then you look back and think, hey, what happened? What are the characteristics of Bitcoin? They dipped their toes into Bitcoin and wow, somehow 5 or 6 years later, Bitcoin became the biggest position in their portfolio. And then you start to think, hey, what's the deal? What are the characteristics of Bitcoin? Then you find out, hey, this is a cool thing here. Censorship-resistant money separates the state and money can no longer be stopped. It makes much more sense to join in and fight back again. So there are a ton of game theoretical aspects that currently favor Bitcoin, which is why Horst says, no, he's not selling. He's just going to keep hodling his Bitcoin.
So you're basically expecting a bigger crash, right? I don't believe in a crash. I think this time we're looking at a bear market, a long bear market. And a long bear market is easier to endure than a crash that comes out of nowhere. If numbers worsen, interventions, money injected. That's the bear market I expect. Alternatively, a crash could happen if the euro fails, the dollar is over-leveraged, or the BRICS gold-backed currency emerges. I'm shifting underperforming ETFs to bonds. Recession indicators abound, as Horst Lüning notes. Could definitely turn out differently, like a crash happening where suddenly it's announced that the euro can't be held up anymore and it tanks. Or the dollar is over-leveraged and something else comes into play. Or maybe the gold-backed trade currency from the BRICS countries comes into the picture. There could be some major upheavals, which is why I'm currently leaning towards reallocating some of the funds that aren't performing well, like the ETFs, that aren't doing so hot into bond funds. This way, I can reduce my volatility and cushion some of that volatility with stop losses, trying to contain the risk on multiple levels.
Right now, there are a lot of what you might call recession indicators, and Horst Lüning is talking about that too. Some people are saying that a crash is coming in 2025, while others think it might happen later. Horst Lüning has a different theory now. He believes we're entering a slow bear market, that we're heading into a period of stagnation or maybe even stagflation, and that we're moving into a depressive phase. There are indicators like the inverted yield curve. There are various recession indicators signaling trouble right now. And historically, like the Warren Buffett indicator, that indicates we're in an overheated market. There are so many different indicators to check. If we look at something like the Warren Buffett indicator, that's also signaling trouble, suggesting that we're in an overheated market. There are just so many different indicators you can look at. And now the question is, according to the cycles that keep repeating with Bitcoin, the Bitcoin bull run should actually last until around mid-2025, possibly even the end of 2025. The big question is, will the crash or bear market Horst Lüning mentions occur after the Bitcoin bull run? If a major geopolitical event happens, the bull run might end early. Normally, following past cycles, the bull run should end in 2025, possibly between August and year's end. Some suggest a supercycle could occur, meaning no bear market for Bitcoin in 2025, similar to the 6-year supercycle after gold ETFs were approved. It could be that if something massive happens geopolitically or something like that, the bull run could end early. But under normal circumstances, if we just extrapolate the cycles from the past into the future, the bull run should wrap up sometime in 2025, maybe around August to the end of the year or something like that. There are also people who say that a supercycle is coming, meaning we might not even have a bear market for Bitcoin in 2025, because when the gold ETFs were approved, there was something like a 6-year supercycle or so. Some people are also speculating on stuff like that. In the end, no one can really know for sure. Now, Horst Lüning is going to touch on a few reasons why he sees potential dangers ahead, what the reasons are for such a weak economy, and for a potential bear market that could start in 2025 and really last for a while.
I expect that starting in February, we're going to see an increase in bankruptcy waves because the annual results that are coming in, which will be finalized in January, will eventually lead people to say, in February, this just doesn't make sense anymore. And before I get into a situation where I might have to take on liability as a managing director, I'd rather go to the bankruptcy judge. So you can see a stronger failure there, combined with rising electricity prices, which further intensifies the cost situation, along with increasing fuel prices, which then raises costs even more. So some companies might not make it after all. Then I'm expecting the market to turn. For me, I can imagine that by the end of Q1 to Q2, the market will at least level off, meaning it won't keep rising, but will just stay flat. And well, most of the investments here have been very US focused, and it might develop better there. But if Trump actually imposes the tariffs like he says he will, it's going to get really expensive for the domestic industry. If he imposes import tariffs, it's going to make things tougher for them economically. That doesn't necessarily mean stock prices will go up. Well, after his election, things went up nicely at first. But you also put together some data on how long it takes after a new president is elected before things start to go back down.
So that could be related to the agreement, right? And then, yeah, exactly, it went down a bit. But overall, it was still positive. That's the question. Yeah, I think it's going to get interesting starting in January. So this year, not much is going to happen anymore. Still, let's rewind a year and you make some fair points. And it's also important, folks, everyone should decide for themselves what to do with their money. I don't think we should copy anything.
So we need to pay attention here that we're not talking about Bitcoin right now. This clip was about the stock markets. But we can see that Bitcoin is very strongly correlated with the stock markets. And if the whole economy, let's say, is booming, if we go into a risk-on sentiment, meaning that risk assets are being pumped back up, which is also tied to the liquidity in the market, then Bitcoin will get pumped up too. That's why you can definitely draw some conclusions from the stock market about a potential Bitcoin price development. We don't really see a proper decoupling yet. Bitcoin is still tied to the stock market, and the stock market is tied to liquidity. In the end, everything hinges on liquidity. Bitcoin is tied to liquidity, the stock market is tied to liquidity, and that's why I think this was a really interesting analysis from Horst Lüning. Let me know what you think in the comments. Do you see it the same way, that you're just holding on without any rebalancing, just saying, okay, hey, let's let the winners run? For Bitcoin, 2025 looks really, really good, even if you might potentially be heading into a bear market, or do you think a crash is coming? I'll drop a link below to 21 Bitcoin, the easiest way to buy Bitcoin in Europe. Here you can get up to 20% off the fees when buying Bitcoin with the code BitcoinHotel. Absolutely recommended. See you later. Peace out.